Hey guys, Kyle with Finance Bro here, back with another video. The market is doing very, very well today. As you can see, very green day for the S&P 500 index and for overall most indexes in general. Anyways, we got some interesting stocks that I want to be looking at in the later part of this video. But if you haven't already, make sure to join our free Discord, guys, with that first link down in the description below. This is how you get access to our daily buy and sell alerts that we post, well, on a daily basis, as the name implies. But let's get into these stocks. This is a Motley Fool article. I'm going to say what I agree, what I disagree about, and of course give you my own thoughts as well as we read through this article. But these are three no-brainer stocks to buy with $500 right now. This is interesting because in a time where the overall recession is hitting most Americans hard, we're seeing a lot of people still kind of want to be active in the trading space, whether they're a day trader, a swing trader, long-term investor, growth investor, value investor, whatever it is that they want to pursue. We're seeing more people with just around 500 to $1,000 want to figure out what plays or what stocks they can get into that will return them money. And according to this Motley Fool article, we have some interesting plays and names here that potentially have some arbitrage opportunities. So without further ado, let's get into it. The first stock that they're talking about here is Bank of America. So this is a $500 apparently type of play that they're talking about. And what's very interesting about this is that they're talking about a bank stock in the middle of what can only really be described as a very controversial week as far as banking is concerned, especially with, of course, SVB or Silicon Valley Bank and its overall issues with regulators and problems that it has been having financially over the last couple of days. Also, SVP is down 60% at the time of making this video, which is pretty nuts, all things obviously included. But again, when you consider this, this actually means that the bigger banks, right, the banks that are not only under much more scrutiny, right, and under much more regulation, like Bank of America, like Chase, like Wells Fargo, are all going to obviously be much more watched and much more carefully looked over, right, which is a good thing because that means that these banks are a lot less likely to fail, right? And what we see here, this is what they say. Despite this as a red mark for financial stocks, SVB financially had a rather unique operating model dependent on venture capitalist deposits. A well-diversified money center like Bank of America doesn't have anywhere near these concerns. The single biggest catalyst for BOFA is the Fed's hawkish monetary policy, which is true, right? We're seeing a huge hawkish standpoint as far as overall monetary policy is concerned when it comes to things like inflation, when it comes to things like interest rates, especially with the interest rates that continue to go up and up. It's good for the banks, not necessarily good for the consumer. But we see banks obviously take advantage of this because the overall interest rates obviously cause people to want to put their money in places where it will grow more, like in savings accounts, which even though there's still pretty much nothing, the interest rates are going up slowly, right? Or specifically with other things like, taking out loans in banks, that makes it a little bit more difficult too. But in general, Bank of America is still a really healthy company, right? We're still seeing lots of money being just poured into this company on a yearly basis, and again, has some really interesting potential there. Next one, this is interesting that they bring this up, Petco Health and Wellness. This stock has been just bleeding out since early May 2021 and really has had a few spikes in price here and there, but it is down massively. So really curious to hear what their overall thought process or thesis behind this company is. This is a second company that would make for a no-brainer right now, apparently, with a number of recession probability indicators screaming at the top of their proverbial lungs that an economic downturn is imminent. It's not a surprise to see Wall Street a bit skeptical of a retail chain like Petco. After all, it hasn't been immune to supply chain challenges and inflationary pressures impacting retail stocks. But there's a big difference between a traditional retail chain for humans and a pet-focused retail chain. There hasn't been a year-over-year decline in U.S. pet expenditures in over a quarter of a century. Based on data from the American Pet Products Association, people tend to view their pets as an extension of their family. Spending on their well-being, happiness continues to grow in all economic environments. Here, okay, like I said, I would give my thoughts on this article and specifically on these stocks that they're picking. I'm not going to just blindly agree with everything they're saying and talking about. My problem with this and with that kind of logic is that, yes, Petco, obviously pet expenditures are still going up. Things are still really looking good for the overall pet economic kind of standpoint or that market sector. But one of the things you have to consider are competitors, right? Look at the competitor like, I don't know, Chewy. Chewy is a company that has just started with e-commerce really purely e-commerce brand, and they are doing very, very well, growing overall revenues year over year drastically compared to its last couple of quarters, and doing very, very well doing it. Petco is still a very much retail chain, brick and mortar focused business with not much e-commerce really kind of improvement in any kind of capacity. And that's one of the big reasons why we're probably seeing this massive downcline, is because they're not innovating. And even though this basically article is saying that, oh, they're down heavy and there's a lot of upside potential, there's also still a lot of downside potential that this company doesn't really last for another 10 years, right? Again, even if you're looking at this from a long-term perspective, there are other much more disruptive companies that I'd be much more comfortable investing in, like Chewy, for instance, instead of Petco. Just my personal opinion. I don't really agree with that part of the article, but that's just me. MasterCard, interestingly enough, I do agree with this specific take. Again, they talk a lot about the SVB financial issues. That doesn't impact MasterCard. This is the biggest headwind for MasterCard, simply for the expectation that a recession will materialize in the US sometime this year, because it's a cyclical company, which basically means that kind of it has its years, right? Especially when the overall financial markets are suffering, because obviously if people aren't using credit cards to buy things, if they aren't buying things in general, they're not using their MasterCards, right? MasterCard is not really being used in kind of any capacity to purchase things, right? But one of the things you have to keep in count is that accounting for close to 24% of credit card network purchase volume in the top market for consumption worldwide, it's not a bad place to be, right? MasterCard really has a strong position at the top of that market sector and really controls a lot of the controlling interest in that specific thing. They're not a monopoly, but they control a heavy amount of it, and their margins are still very good. Annual fees, interest income are still doing very well in those specific sectors. And again, MasterCard, in my opinion, has always been kind of a little bit of a blue chip stock, in my opinion. Just my opinion. Let me know in the comments below if you disagree. Other than that, though, guys, that's pretty much all I have for you guys today. Make sure to join our free Discord with the first link down in the description below. But other than that, guys, I'll talk to you guys later. My name's Kyle with Finance Bro. Take it easy.